With Biden dropping out from the US presidential election campaign, markets are second-guessing the Trump trade. The Trump trade implies that certain pockets of the US economy are going to gain due to deregulation and tax cuts. When looking at the stock market, certain sectors such as banking, industrials, and energy stocks are seen to gain the most. When looking at asset classes, Bitcoin looks to be a favorite, while instead fixed income US Treasury seems to be the biggest loser. Why? Because a big fiscal spending is going to put upward pressure on bond yields. Now that Democrats might have a higher probability of winning the US presidential election than before with Biden, markets are trying to understand what would happen if we don't have a Trump trade. Well, things might not be that different, in the meaning that fiscal spending will continue to be high and tax cuts might be implemented, but for the lower and middle classes of society. That means that the US economy is at risk of a reacceleration anyway, and that would be bearish for US Treasuries and put upward pressure on US Treasury yields. At the same time, for stock markets, a Democrat in the White House might be a signal of status quo, where certain sectors which have been gaining in the past few years, such as healthcare, technology, and renewable energies, will continue to gain going forward. However, we have to keep in mind that the US election is 4 months away, and from today until November, things can greatly change. So markets might be volatile when news regarding the presidential runs appear, but hard data are going to drive asset class performance. The US economy is decelerating, unemployment is rising, and inflation looks on a sustainable path towards 2%. This implies that the Federal Reserve is very close to cut interest rates. That would be a boost for certain asset classes such as bonds, but also for stocks markets as a whole.